Hello everyone, welcome to Cryptocurrency Mobile Mining and Trading. I'm Dixon and I'm excited to have you here. After countless hours of research and testing, I'm here to bring you the most reliable, real-time updates, insights, and strategies to help you stay ahead in the world of crypto mining and trading. Let's explore opportunities, learn together, and grow our crypto knowledge and profits, all from our mobile devices. Before we dive into today's big news, make sure you hit that subscribe button, give this video a big thumbs up, and smash that notification bell. It really helps the channel grow and ensures you never miss out on these crucial updates. Alright, let's get right into it. The big story today is all about Ether. It seems the big players, the institutional investors and large holders, are quietly starting to buy up ETF again. Why now? Well, there are two major things happening at once. First, there's a growing feeling that the US government shutdown might end soon. This is a big deal because it removes a huge cloud of uncertainty that's been hanging over the market. Second, there's fresh hope for Ether ETFs. The initial hurdles and regulatory headaches seem to be easing up, making it easier for big money to flow in. So what are we actually seeing? Data providers are showing that institutional and ETF holdings of Ether are at a multi-month high. This is a strong signal of renewed confidence from the big investors. Market analysts are buzzing, saying that the mere prospect of the US government reopening has already boosted risk appetite across the entire crypto space. It's like a green light for investors who were sitting on the sidelines. On top of that, on-chain data, which is what we can see happening directly on the blockchain, shows significant buying from whales. Those are individuals or entities holding massive amounts of crypto. They've been making tactical buys over the past week, even while some ETF funds saw some short-term money flowing out. Let's break down exactly what happened. Over the last week, as news and commentary started pointing towards a possible end to the US government shutdown, the price of ETH and its on-chain activity started ticking upwards. Traders saw this as a signal that the institutional money, which had been paused during all the political drama, was about to come flooding back in. Market trackers and crypto news outlets reported that the combined holdings of institutions and ETFs have been rising. Data firms even flagged some huge single-day purchases by whales, which looked like they were timed perfectly to get in just before the institutions really started buying again. Now, the ETF flow data has been a bit of a mixed bag. Some days we saw money flowing out of US spot ETH ETFs, but at the same time, other trackers reported new inflows and an overall growth in the total assets managed by these ETFs. So what does this mean? It suggests that what we're seeing is more like a rotation, investors moving funds around or taking some quick profits, rather than a major stop in demand. Analysts are saying that the underlying structure for ETFs is getting stronger, more providers are listing them, and it's becoming easier for people to buy in. These are structural positives that could support institutional buying for the long haul, especially once the macro uncertainty clears up. So why are institutions buying again? Let's look at the key reasons. First, the macro tailwind is clearing. If the government reopens, market functions will return to normal. We're talking about better liquidity and clearer timelines for regulations. This makes it much easier for big asset managers and corporate treasuries to decide to put their capital into crypto. Traders believe this removes a major barrier that was holding back large discretionary investments. Second, the ETF pathway is maturing. After a bit of a rocky start with rollouts and regulatory friction, Ether ETFs are becoming a legitimate and credible way for institutions to get exposure to ETH. Fund managers are now seeing these ETFs as reliable channels to handle large orders. And third, we have the on-chain accumulation by whales and corporate treasuries. When these large addresses and companies start building up their positions, it does two things. It reduces the available supply of Ether on the market, which can push prices up, and it signals a strong sense of conviction to other institutional players who might be watching. Let's pause here for a moment. This is a lot of information, and I want to make sure you're getting the most out of it. If you have any questions about what we've covered so far, or anything else crypto-related, drop them in the comments below. I'll do my best to answer every single one. And if you're finding this breakdown helpful, please do me a favor and hit that like button and subscribe if you haven't already. Your support is what keeps this channel going. Now, how has the market reacted to all this? Well, the price action for ETH has been positive. It has recovered from its recent weakness and showed some nice gains as the headlines about the shutdown resolution started to circulate. This move wasn't just in ETH, it was mirrored across other risk assets too. However, it's important to understand the nuance here. The flows are still mixed. As I mentioned, ETF flows can swing from day to day. We've seen money flowing out even during this broader accumulation trend. This could be due to rebalancing, profit-taking, or even technical liquidations. It doesn't mean the bull case is over. Another point to consider is concentration risk. While institutional accumulation is a big deal, it's also quite concentrated. A few large buyers or a couple of big ETF flows can really move the market. This means we could still see sudden price swings or liquidity events, so it's not going to be a straight lineup. So the big question is, what could push ETH to new all-time highs? In my view, it would be a combination of a few key factors. First, we'd need to see sustained institutional inflows. This means continued steady purchases through ETFs and corporate treasuries, not just a few big one-off whale trades. Second, we need a clear macro backdrop. The shutdown needs to officially end, lending and liquidity conditions need to normalize, and regulators need to get back to their standard processes for approvals and new listings. A stable environment is crucial. And third, we need to see strong on-chain demand fundamentals. This would look like more people staking their ETH, an increase in stablecoin issuance on the Ethereum network, and growing real-world or DeFi usage that takes more ETH out of circulation. If all these conditions fall into place and the money keeps flowing in, ETH could certainly retest or even break its previous peaks. But even with all these positive signs, the timing and the magnitude are still uncertain. Things like concentrated flows, unexpected regulatory news, or a sudden macro shock could still derail a smooth run-up. Let's talk about the risks and caveats because it's important to see the full picture. ETF flow volatility is a real thing. The day-to-day numbers can be noisy and don't always reflect the long-term trend. Don't get shaken out by a single day of bad data. Also, crypto remains highly sensitive to global liquidity. Any changes in guidance from central banks or shifts in fiscal policy could quickly reverse the positive sentiment we're seeing. And finally, regulatory uncertainty is always a factor. Even with the improving headlines, new regulations, either in the US or internationally, could change how ETFs work, affect custody rules, or dampen institutional appetite. So what's the bottom line? There are credible signs that institutions have started accumulating ETH again. This is driven by improving signals around the US government shutdown and the maturing ETF story. This trend is being complemented by on-chain whale buying. Together, these forces can create a runway for the price to discover new levels. However, whether ETH reaches new all-time highs will depend on how durable these flows are, whether the macro uncertainty truly ends, and if we can avoid any major regulatory setbacks. In short, the ingredients for a sustained rally are starting to align, but the execution risk and the short-term noise remain high. It's an exciting time, but as always, it's crucial to stay informed and be prepared for volatility. And that's our deep dive for today. I hope this analysis helps you make sense of what's happening in the market. Remember to do your own research before making any investment decisions. If you enjoyed this video and want more content like this, please give it a like, subscribe to the channel, and don't forget to hit that notification bell so you're the first to know when I post a new update. Thank you so much for watching. I'm Dixon, and I'll catch you in the next video.